It's always good to check the market again after a nice relaxing week off. Hey, this is Chiro, and this is Watchlist Review, where I'll recap the most significant news of some of my holdings and my thoughts. Also, don't take this video as investment advice. It is important to be well informed before deciding to do something that might make you sad one day. Looking at the S&P 500 on the 1-month scale, we see the broader market's been doing well overall. Unlike Hyliion, which is about 60% down from its peak of $55 per share. So what's happened? Did you not hit the like and subscribe buttons on my videos yet? The merger between Tortoise Acquisition Corporation and Hyliion was completed during a shareholder meeting held on the 28th of September 2020, and the shares have been dropping like a rock since. If I had to hazard a guess, some of the catalysts to this are short-term traders exiting their positions in a short report issued by Bonitas Research. I'm not going to dwell too much on these as I'll be focusing on how various investment strategies worked out and how I'm changing my investment strategy. Comparing the performance of investment strategies discussed in my first video on Hyliion on a dollar per share and percentage basis, we have the following approximate results if you had bought common shares, bought warrants, sold puts, or attempted to profit off the warrant arbitrage by shorting shares and buying warrants. If you had the opportunity to profit off the short interest from holding Hyliion, the payoffs differ substantially from what's shown here. But if not, we see that holding warrants was a better choice than buying common shares, and that selling puts continued to depend on the warrants becoming exercisable, which should happen in the next few weeks. If, and obviously this is a huge if, Hyliion shares had not tanked, puts stood to be very profitable with arguably less downside risk than buying a warrant. Lastly, we also see that the warrant arbitrage suffered a bit as the arbitrage opportunity between shares and warrants increased close to the merger vote but is now quickly approaching the maximum profit. While the recent price action makes me sad, I remain bullish on Hyliion in the long term. As is, I still think warrants are a good and relatively simple way to invest in Hyliion. Having said that, I've sold my warrants in favor of a bullish call spread. Assuming Hyliion remains above $18 for a month following warrants becoming exercisable, Hyliion will likely force a redemption of the warrants, which means warrant holders will have on the order of a month to cough up $11.50 per share to convert their warrants into shares. The bullish call spread allows me to maintain the same exposure in terms of number of shares, and delays needing to commit additional capital until the calls expire later next year, which is useful because I'm kinda poor. Selling the out-of-the-money call still demands an okay premium and helps offset the worst-case loss if the share price of Hyliion remains down in the dumps. This incurs some losses, that is, the $3 difference between warrants and shares, but I've deemed this acceptable to avoid the forced redemption for now. I hope I was able to share some insight into how I've approached investing in Hyliion. Let me know your thoughts in the comments below, drop a like, and consider subscribing if you'd like to see more. Either way, have a great day.